Hello, everyone. Good morning to you, and welcome to another promising session of my daily technical focus. And for this week, we are going to be deliberating on four financial instruments as always. And I already shared the publication on this instrument during the course of the weekend. For those who have not watched the video, the link is right in the description box of this current video that you are watching right now. And I would like to let you know that I've made things a little bit simpler for you to be able to navigate to whatever area of focus you want to be looking at. So it is duly timestamped, so you can easily click on whatever timestamp you want to be looking at, and it will take you right into that area. So we are going to be looking at the USOilSPOT, the XAUUSD, the USDJPY, and the GBPUSD for this week as usual. And it's a little bit on a positive note to the start of the week, as we finally got an announcement from the president of the US as regard the US debt ceiling negotiation, which happens to have technically been reached at the particular point in time, though there are still some processes that will still go on behind the scenes in terms of compromise and all that. But at the moment, we have a good signal that the US debt ceiling will be increased for the next 2 years. And so we are going to be looking at how the market is going to be reacting to this information. And don't forget that we have a handful of high impact events we are also going to be looking at for this week. And I already pulled them out, though we shared them during the course of the weekend while I was reviewing the instruments that we are going to be looking at for the week. But I can also share it with you right now. And we have the first high impact. Of course, what we do here is to focus on high impact events that will be affecting the currency pairs that is included in our watch list. And these are the US dollar, the Japanese yen, and the pound sterling. And from what we have from the economic calendar for this week, talking about high impact events, we only have three, which is coming in from the US docket. So we have the ADP employment change coming in on Thursday. So we don't have any high impact Monday, Tuesday, Wednesday. The first one will be coming in on Thursday, and that is the ADP employment change, which is a measure of the change in the numbers of employed people in the US. So a higher reading is traditionally seen as something positive for the dollar, while a low reading is seen as negative for the dollar. And from the previous data we have here, we have 296,000, sorry, and we have a consensus projection of minus 22,000, which is not on the positive side right there, but we still wait for the actual data to come in. And then we also have the ISM manufacturing PMI. It's an index that shows the business condition in the US manufacturing sector. And it is a significant indicator of the overall economic condition in the US. And anything above the 50 is seen as positive, while anything below 50 is seen as negative. Though in the last couple of months now, it has been on the low side. It has been below 50 actually. And the previous data came in at 47.1, and we have a general consensus projecting 47 here. Then on Friday, June 2nd, we have the non-farm payroll, which always gives us the number of new jobs created during the previous month, and in all non-agricultural business that is. And this is one other major event majority in the market will definitely be looking forward to. So we have a previous data of 253,000 as against a consensus projection of 180,000. So if you look at what we have in terms of the high impact event coming in from the US docket, you will notice that the figures, the projection are not quite promising as regards favoring the dollar in that sense. So we might likely be seeing some choppy situation during the first half of this week before we begin to see some traction, especially across pairs that involve the US dollar. So all this we are going to be taking into consideration while we review the current market structure in anticipation of the new week. And another thing about this week is that talking from the psychological standpoint, it's a very, very sensitive week as regards to the fact that we're just entering the last trading day of the month, last trading week of the month. And most of the time, whenever we head into this kind of situation, most positional traders definitely will want to be doing some profit-taking activities, reviewing their existing positions, which they opened probably at the beginning of the month to see how well it's doing, closing in some position, and we are likely going to be seeing some traction in that regard. So we are going to be looking at all this while we deliberate on the current market structure that we have here. So with that being said, let's dive right into the business for today. And I want to reiterate here that for those who are joining us for the first time, what I normally review during our morning live session is the 1 hour time frame. So I've done a top-down analysis from the higher time frame in the videos in the description box below. So if you want to have a background knowledge of how we got to this point and how we are making that decision we are making on the 1 hour time frame, I would advise you to watch those videos so that you can have a better idea into what we are talking about here. So with that being said, let's dive into the first commodity we are going to be treating this morning. And of course, you know how we do it, the US oil spot. So on the US oil spot, during the video which I shared, I made mention of the potentials that buyers have in this market. And one thing I said here is that I'm leaning towards a bullish momentum unless the market states otherwise. And in order to guide our bullish attempt in this market, we have a key level sitting at the $73 area. Let me quickly show you what that how that levels looks like on the 4 hours time frame, so that we can all have be on the same page here, so that we can get things and the right perspective. So this is the 4 hours time frame here, and it's quite obvious that we have been finding lower highs in this market, but yet to find a lower low. That is lower low in the sense that breaking the $68 area, which happens to be the lowest point price action had been in the last couple of months. And with the fact that price action is yet to find a lower low at this point, I'm of the opinion that a bullish traction is gradually coming in. And if we zoom in to see what has been going on in this market since the beginning of this month, you will see that we have been noticing some bullish traction in the sense that price action has been finding higher lows in this market. And as a result of that, we have a bullish trend line figured out, as we definitely want to be using that trend line to guide our trading activity for this week. And one more important thing about this whole structure is what happened last week. We saw the bullish traction that began around the $71 area, a very strong psychological level considering the round figure of that price. And we saw how it led into the breakout of that trend line we identified earlier. And this happens to be the first time price action will be breaking out of that trend line. And you all know that from a technical standpoint, that whenever price action breaks out of a key structure like this, we expect that one point in time price is likely going to come back into the structure. And if you look at the structure here, it shares a very beautiful confluence where the trend line which we identified earlier and the bullish trend line which we identified earlier as well shares price action meets at that point and immediately gets into that area. What we saw last week was a bullish momentum build up around that area, bringing price back into that key level we identified at the $73 area. And so what I said in my video during the course of the weekend is that I'm going to be looking out for buying opportunity if price action ever breaks out of the key level. And one thing I also mentioned here is that we want to be very, very patient around this area. We want to be very cautious around this area. And the reason why I've said this is simply because of how this zone actually between the $74 level and the $73 range has been a very strong selling niche in this market since the beginning of this month. So even if we are getting ready to buy around that structure, we want to be around to ensure that we move our stop losses accordingly to judiciously protect our position against any sudden pullback, as currently we are going to be within the seller's territory. So with the information we have gathered here on the 4 hours time frame, it becomes a little bit clearer on how we are going to be positioning ourselves ahead of the week. So the next thing we are going to be doing now is to scale down into the 1 hour time frame to see how majority in this market has been reacting to that $73 level, at least since the beginning of this week, to see where price action is likely going to be going during this week. So we have the key level at the 73, and like I said here, if price action remains above the key level, we look out for buying opportunity. But if it drops below the key level, we start considering some selling opportunities in this market. But let's quickly run through the 1 hour time frame and see what is really going on in this market. So right now we are back at the 1 hour time frame, and if you have been with me on my on my Telegram and TradingView platform, you would have gotten this update. So this is what we saw here at the beginning of this week. We have seen how price action has been a little bit choppy, where we have a range between the $73.55 level, which happens to be the highest point price action has been for this week. And then we have the support line for the week, which also lines exactly with that key level we identify at the $73 area. And now one more thing that also is something we also want to take into consideration while we monitor price action from this current structure is the fact that the week started on a bullish gap, and we have about a 40-cent gap here. So this was where price action closed last week, around the $72.80. Then during the course of the weekend, there was some level of transaction, which it resulted in this gap that we saw here. So it's looking as if the key players in the market are looking forward to a bullish momentum, buying during the course of the weekend, bringing price above that $73 area. So with the information we have here right now, how do we intend to take advantage of any trading opportunity this week? Well, looking at the structure here, you know how we do it whenever we have a flat channel like this. And what we want to do right now is to remain patient, waiting for structures to mature. And the signal we are going to be looking forward to is going to be a breakout, either a breakout of the resistance line to give us a buy opportunity, or the breakdown of the support line to give us selling opportunities. So considering the fact that we are within seller's territory, which I emphasized on the 4 hours time frame, let's first of all talk about the potentials that the sellers have here. Now, if we are going to be selling the US oil spot today, like I said, we want to see price action break down our key level, and coincidentally, the key level also shares a confluence with that trend line, with that support line that we identified earlier. So to sell right now, we want to see price action break down that structure. But one thing I want us to do here, and because of the fact that we saw a bullish gap at the beginning of the week, I want to see some confirmation before I want to jump into any sell position here. So if price action ever breaks down the $73 level and price action comes back to retest the structure, this will give me a level of comfort to be part of a bearish move. So as soon as the breakdown happens, I want to be scaling down into my lower time frame to look out for patterns that will support selling pressure. So I want to see signs that buyers are finding it difficult to climb back above that key level, after which I want to position myself for a bearish momentum to the downside. And remember that we have the bullish trend line, which we identified on the 4 hours time frame here, and depending on how price action reacts to that trend line will determine if we are going to be adding more sell position to our existing trade, or we are going to be getting ready to buy the US oil spot at that point. So this is the only way I'm going to be selling the US oil spot today. Anything outside this will not be something comfortable for me to sell at this particular point in time. Now, with that being said here, let's look at the potentials that the buyers have. And from the fact that we have a bullish gap, it's a sign that participants in the market are going to be, the major key players are looking forward to a bullish traction this week. And if that is going to be the case, even though we have this signal, we are not going to be jumping into a conclusion, of course. So we want to see price action take out the range we have right now. As you can see, we have price action ranging between the $73.55 and the $73.05 level. So we want to see price action break out of that resistant line, which happens to be the key level, the resistant line for the week, and where price at the highest point price action has been for this week. So a breakout of the resistant line will give me an opportunity to buy. I want to have a buy stop order above that structure, and if it so happens that price action comes back to retest, we could have a situation where price could even drop below the $73.55 level, looking out for buying pressure. And if it so happens that we have double bottom structures that will give us confirmation that bullish momentum is gradually building up, then we want to be adding more position, then have a buy stop order above the $74 level to be part of a trend continuation to the upside. So this is how I'm going to be buying the US oil spot today. Anything above the $73.55 level looks promising to buy the US oil spot. Then another thing I was able to spot here while looking at the chart right now is the fact that since Thursday of last week, we have seen how price action had continued to find higher highs and higher lows in this market. So we want to acknowledge the higher lows here so that it can give us a yardstick that we are going to be using to guide our trading activity for this week. So bringing out our line chart at this juncture, we want to connect the series of higher lows in this market so that we can project a potential trend line that we are going to be using to guide our trading activity for this week. So we have a trend line figured out here. So I would like to thicken this a little bit to emphasize its importance at this particular point in time. So I will give it a green color, and let's have it right on the 1 hour time frame only. Okay. So it makes our job easier during the London and New York session today. And what this simply means is that as long as price action remains above that trend line, we want to feel comfortable in our buy position while we look out for more opportunities to buy the US oil spot. But if price action breaks down that trend line, then definitely we want to see this as a bearish signal where we want to get ready to sell. And if you look at this closely, you will see how the support line here shares a beautiful confluence with that trend line. So if price action breaches the trend line, it's a sign that the trend line may no longer have the capacity to continue to negate the bearish attempt, and it also falls in line with what our expectations are as regards selling the US oil spot today. So let's be on standby to catch any of these opportunities. Breakdown retest gives us the confirmation to sell the US oil spot for today, while a breakout of the resistant line at the $73.55 level gives us the opportunity to buy the US oil spot today. So these are my views here on the US oil spot. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am willing to be of help in that regard. So that is that on the US oil spot. So let's move right into the next instrument for today, which is which one should we go into right now? I think we should go right into the GBPUSD. So on the GBPUSD, hold on a second. I did an update this morning, so I should be seeing some illustration on my chart. Okay, beautiful. So we have the GBPUSD figured out here, and if you had been with me on my TradingView and Telegram platform, you would have received an update in that regard as into what we are looking out for from this current structure. So here we are on the 1 hour time frame, and what we are doing here is to try and see how majority in the market has been reacting to the structure. And one more thing I would like to let you know today is that the market might look a little bit phlegmatic today, as we have the US economy observing a public holiday today. I think it's the Memorial Day, some sort of a thing, and there is a likelihood that because of this, we might not really have trading activities in terms of voluminous trading activities today. So let's keep this in mind. So when we start seeing choppy situations, we should understand what is really going on behind the scene as regards to that. So right now on the GBPUSD, what we saw here this morning is a consolidation phase, actually, where price action is trapped within a range right now between the 1.23580 and the 1.23400 level. And with the situation we have here, it's looking a little bit more bullish initially at the beginning of the first couple of hours of the week, as we saw price action began at our key level at the 1.23400 area, which still happens to be the lowest point price action has been for this week. So we have a support line there. And one thing we have been noticing since the beginning of this week is that sellers are finding it difficult to break down that structure. So we can see any time price action comes into that area, we saw sharp rejections from the buyers to negate all bearish attempts around that area. So with a sign here that price action broke out of the 1.23580 this a couple of hours ago, I'm of the opinion that we are likely going to be seeing a bullish attempt from this market. That is just an opinion, actually. We want to listen to the market structure to make our decision here. So with the breakout of that level, what we saw immediately after the breakout was this engulfing bearish candle, bringing price back into the channel. And one interesting thing here is that as soon as it got back into that support line at our key level 1.2340 area, we saw how buyers again picked up the momentum around that area. So we are going to continue monitoring how price action reacts to this level. And for me at this point, I want to be having a buy stop order above the 1.23580 because we already have a breakout of this structure. So if it happens that price action does not break below the 1.234 here, then I want to see a breakout of the 1.2358 the second time here to probably signal a bullish momentum for this week. So I'm having a buy stop order above the 1.23580 to be part of a bullish momentum at this point. And if it continues to the upside in such a way that it breaks out of the 1.23750, then we want to be adding more position at the breakout of that structure. And one thing about the breakout of the 1.23750 here is that it's going to give more validation to the bullish momentum that we have seen going on at this particular point in time. And why have I said so? Well, if you look at the bearish trend line we identified in the video, it also shares a confluence with the 1.23750. And if it so happens the price action breaks out of that trend line, it will be a clear sign that the trend line may no longer have the capacity to reject, to hold on to the bullish pressure around that area. And that will also have given us a beautiful sign that we want to be going bullish at this point. So in order to maximize that bullish momentum, we want to join early enough. So a breakout of the 1.23580 will welcome the buying opportunity. And if price action goes on to break out of the 1.23750, then we want to be looking out for more opportunities to buy the GBPUSD today. And to further help us to feel comfortable in our bullish momentum here, we want to connect the series of higher lows. And if you notice, since last week Thursday, just like what we saw on the USOilSPOT, we have been seeing some bullish traction here. We've seen higher lows, and we are seeing higher lows here again this morning. So if price action does not break down the structure, then we want to be feeling comfortable in our buy position. So I want to connect the series of higher lows here, so it will also give us a leverage to be confident in the bullish momentum that we are going to be taking this morning if price action breaks out of the 1.23580. So I will be doing some little adjustment when we bring back our candle chart. So let's capture all the higher lows here, so we have something like this. So as long as price action remains above this bullish trend line, we're definitely going to feel comfortable in our buying expectation in this market, and of course look out for more opportunities to buy the GBPUSD today. However, if anything like price action breaking down that our key level had the 1.23400 area, price action will definitely have broken down that trend line, breaching the trend line to signal the appearance of bearish momentum in this market. So if we are going to be selling the GBPUSD today, we'll have no other choice than to look out for selling opportunities only if price action breaks down the trend line, which of course will break down the key level too as well, and continued selling pressure below the structure will be the confirmation we are looking forward to join the bearish move to the downside. And this confirmation will only happen on our lower time frame. So when we scale down to our 10 minutes, 5 or 15 minutes time frame, we look out for selling pressures, signs that buyers are finding it difficult to climb back above the trend line is what we are going to be looking out for to sell below the bullish trend line. So we look out for more opportunities to add more position if price action takes out the 1.23100 area to add more position to our existing trade. So that is how we are going to be selling the GBPUSD for today. Trust me, I'm always going to be with you in the comment section on both my TradingView and Telegram platform to give you updates as at when due. If you do have any questions regarding what I just explained so far, feel free to let me know in the comment section, and trust me, I'm willing, of course, to be of help in that regard. So let's see the next pair we are going to be looking at this morning after the GBPUSD. So let's take on the XAUUSD, that is the gold spot, before we dive into the last pair. So the XAUUSD, let's see. Okay, so this is the XAUUSD, sorry, and I hope you've watched my video on the XAUUSD. Please do, as you will have a better knowledge of how we got to this point right here. I will not be deliberating on the higher time frame because our center of focus during our morning live session is basically on the 1 hour time frame. So if you do want to have a background knowledge of how we got to this point, I would advise that you watch the video. The video is right in the description box of this current video you are watching, and it's duly time-stamped, so you can easily navigate to whichever area you want to focus on in that video. So with that being said here, let's dive right back into the business. And one thing we did here this morning, if you had been with me on my TradingView and Telegram platform, you would have received this update. So we have a new structure right here where price action has been choppy since the beginning of the week, and we have it ranging within a $7 channel, right between the 1,947 and the $1,940 level, giving us a consolidation phase. And you know how we do it. Whenever we have this kind of flat channel, we want to wait patiently for the market to give us a signal, which is definitely going to be coming in the form of either a breakout of the resistance line at the 1,947 to give us the buy opportunity, or the breakdown of the 1,940 to give us the selling opportunity here. But if we look at the current structure we have here, which we identified on the 4 hours time frame right in that video, let's go into the 4 hours time frame and let's look at things from an holistic point of view so that we can have a background knowledge of what is really going on here. So what I did here on the 4 hours time frame was to take into consideration price actions activity since the beginning of this month. And one thing you will observe here is that price action has been on a very strong bearish momentum, finding lower lows and lower highs in this market. However, something interesting happened a couple of weeks ago where we saw a little choppy situation go on between the 1,980 just right here and the 1,960, and not until last week's trading session we finally saw the breakdown of that key level at the 1,960 to incite a bearish signal in this market. Now the question at this particular point in time is that will this bearish momentum or bearish signal we have here continue to the downside? Well, the structure will give us an answer to that. And one thing I observed while trying to decipher what is going on in this market is that when I zoomed in, I saw that around that 1,940 level, a very strong psychological area considering the round figure of that price, we saw how sellers were finding it difficult to maintain that bearish momentum around that area. So as soon as price action got into that level, we begin to see buy pressure resume around that area, and this lasted about 48 hours throughout the second half of last week. We saw how sellers found it difficult to break down that level. Now the question right here is that will this be a platform for another wave of bullish momentum? Well, the structure will tell, time will tell, of course. But what I saw here from a technical standpoint is that price action is looking as if it wants to transition into a reversal pattern in the form of a double bottom structure. When I took into consideration the impulsive move that got us into that demand zone here, which I have named a temporary one here, we saw the buy pressure resume. Price action came back, was unable to break down the previous low, giving us a sign that a reversal pattern is gradually coming in at this point. But we still need it to be validated, and only if price action comes back into or break out of the neckline of that reversal pattern is when we are going to be considering buying the XAUUSD today. And in order to guide this momentum, we have a key level situated at the 1,952, which also shares a confluence with the bearish trend line that has been supporting the bearish momentum so far. So as long as price action breaks out of that area, we are in to buy the XAUUSD. And remember, we have a key level at 1,960, where a further breakout of that structure will be welcoming more position. Now, there's one thing I would like to let you know here. Considering the breakdown of that demand zone, which happened here, there is a chance that price action could come back and retest that structure to incite another wave to the downside. So we want to keep this in mind. So if we are buying around that area, we want to be very cautious, be around to protect our position as soon as price action moves in our favor, as we never can tell. Anything could happen within the 1,960 and the 1,952 to incite a bearish move. So we want to guide our position accordingly, and as soon as it breaks above the 1,960, then at this point we know that we are back at the buyer's territory, which has been a strong demand zone since the second week of this month, to give us the confidence that we want to remain bullish in this market. So when I scale down into a much more lower time frame, the 1 hour time frame, this was what I was able to spot here during the early hours of the week. Price action has been ranging, and for the fact that price action is sitting on a strong demand zone at the 1,940, I'm looking forward to price action breaking out of the 1,947. That is the highest point price action has been for this week, to give us a buy position. And one thing about that level is that a breakout of that structure will also have broken out of that trend line we identified on the 4 hours time frame, to give us a signal that the trend line may no longer have the capacity to continue to negate the bullish attempt in this market. So I'm going to be having a buy stop order sitting above the 1,947 so that we can capture that bullish momentum to the upside. And remember what I said earlier, we want to ensure that we are around to secure our position as soon as price action move considerable well in our favor. A further breakout of the 1,952 will welcome more opportunities, and if price breaks out of the 1,960, we look out for more opportunities to add more position to our existing trade here on the XAUUSD. So that is how we are going to be looking out for buying opportunities in this market. Excuse me, please. However, you know how we do it here. Whenever we have a perspective, we also want to take into consideration the potentials that the sellers to have in this market. And one thing about this whole structure, and considering the fact that price action has been bearish since the beginning of this month, we cannot ignore the potentials that the sellers have also. So if we are going to be selling the XAUUSD this week, what do we want to be seeing on this chart? Well, like I said earlier, we already have a flat channel where price action has been ranging between the 1,947 and the 1,940. Of course, we want to see price action break down the support line of that area to give us an opportunity to sell. And mind you, the support line that we identified here also shares a confluence with that demand zone that has been negating sellers' attempts in this market in the past. So we want to be very careful here, and we want to see significant confirmations that will allow us to join a bearish move. Even if we have a breakdown, it could still turn out to be a false breakdown. So we want to see further confirmation here before we join a bearish move, and that will come in the form of a breakdown. Then we scale down to our lower time frame to see that price action is forming a reversal pattern around this area. We want to see selling pressure around this area. We want to see that buyers are losing the momentum. Buyers are finding it difficult to climb back above the 1,940, something like multiple rejection of this level for us to have a confirmation that sellers are gradually building momentum. Then we could actually join the move to the downside. So this is the only way we are going to be selling. We're not having a sell stop order here because of the demand zone we have here. We will see price breakdown first of all, retest of structure on our lower time frame before we can ever think of selling the XAUUSD at this juncture in this market. So that's how we are going to be looking at it here. And trust me, I will be with you in the comment section on both my trading view and Telegram platform to give you updates as at when due. If you have any questions whatsoever, feel free to let me know in the comment section. And trust me, I'm willing to be of help in that regard. So let's move right into the last pair for today, which is the USDJPY. So on the USDJPY, what do we have here on the USDJPY, and what are we looking at? So last week, we had a very profitable trade on the USDJPY as we continue to buy the USD against the Japanese yen, and price action continued to find higher highs and higher lows. And we saw a situation here where price action broke out of the 140.00 level. This is the first time price will be getting into the structure this year. And we saw the breakout of that structure happen, giving us more signal that the buyers are getting stronger at this point. But as soon as price action tested the 140.750, this was duly explained during my live session, during my in my video on the USDJPY during the course of the weekend, where we started seeing some selling pressure around that area. And as a result of that, I decided to use the 140.750 as my key level for this week. Let's run through the 4 hours time frame quickly and see how the momentum has been building up so far this month. So this is what I was able to come up with on the 4 hours time frame here. And since the beginning of this month, you will see how price action has been bullish in this market, giving us a uniform ascending channel to work with. And one interesting thing about this channel is that you will see that for the last couple of weeks in this market, price action has been at the upper half of this ascending channel, giving us a sign that buyers are still very strong in this market, as sellers were unable to bring price below that structure. But one thing I would like us to take note of here, if we zoom into the current structure, is that as soon as price action tested the 140.750 level here, which I said earlier is our key level for the week, we started seeing some selling pressure around that area. And one important thing about that structure is the fact that it also shares a confluence with the resistant line of that ascending channel. So the question right now is that, are we going to be seeing a bearish move where price action will drop back into the support line of the ascending channel to continue the trend continuation to the upside? So this is one thing I want to be considering here. And in order to do this, what we are going to be doing is to try to decipher what is really going on around the 140.750. We want to see how participants in this market has been reacting to the structure since the beginning of this week to determine if we are really going to be going bullish or bearish for this week. So in order to do this, we scale down into the 1 hour time frame. And if you had been with me on my on my Telegram and TradingView platform, you would have received an update this morning as regards to the new setup we are going to be using to guide our trading activity for today. And if you had done that, you already have a position triggered at this particular point in time. So let's quickly run through my commentary on the USDJPY this morning as regards what our plans are, at least for the first half of this week. So right here, this was my commentary this morning on the USDJPY. So I said here, the week started on the bullish note, breaking out of the key level identified in the video at the 140.750 level. But it appears this momentum isn't lasting long as price action not only drops back below the key level, but went ahead to break down the support line of the range at the 140.530 to inside a potential bearish signal. Hence, we shall continue to hold on to a bearish bias as long as price action remains below both the key level and the 140.53 zone. So let's look at what I was trying to explain here on the live chat. So I said here, this was the range we identified this morning, where price action has been ranging between the 140.920 and the 140.530 area. So we had a choppy situation initially at the beginning of the week. Price action climbed up, but as soon as it goes to the peak at the 140.920, we saw bearish momentum bringing price back down, breaking down our key level. And you know that whenever price action is below our key level, of course, we want to be looking out for selling opportunities. And with the situation we have here, with the breakdown of structure, I mentioned that we want to look out for retest to join the bearish move to the downside. And in fact, price action came back to do a retest of the structure, which welcomed a sell position at this point. And if you are taking advantage of that opportunity, you will currently be running with about 18 pips in profit at this point. So let's see how price action plays out going forward. Our stop loss is going to be somewhere above the key level, or probably close to around that resistance line here, about 30 to 35 pip stop loss there. And let's give room for price action to breathe, because there is a chance that we could see price action come back to do some retest around that area to inside another wave to the downside. So let's keep this in mind while we continue to monitor price action. So as long as price action remains below the 140.750 along this area, we want to remain very bearish in this market. So that is how we are going to be looking at the USDJPY today. So we have a sell position triggered at this point, and we continue to look out for more opportunities to sell. Now we also have a structure here again. This is where price action, this is the lowest point price action has been so far this week, and that is the let's see, 140.230. So I would like to highlight that one so that we can also use that as a yardstick to guide our trading activity today. So if price action breaks down, retest that level, we want to be looking out for more opportunities to sell the USDJPY for today. So let's see how things plays out from this current structure. And if it so happens that we begin to see buy pressure around this area, I will be updating you on my TradingView and Telegram platform if we start seeing buy pressure resume around that area. So if we start seeing something like a double bottom structure or probably a falling wedge, then we might start considering buying around that area, especially if we consider the impulsive bullish engulfing candle that brought us to this point. So that is that on the USDJPY for today. And trust me, I will be with you in the comment section of both my TradingView and Telegram platform to give you updates as at when due. So on this note, I want to call it a day here on the Sheriff Daramola technical analysis morning live. and I hope we are well equipped to be able to take advantage of any trading opportunity today. And one thing I would like to state here, that today might look a little bit slow, considering the fact that the US is observing a public holiday today, so market might not really pick up as expected. So let's not be compulsive in our actions. Let's wait for market to mature, structures to mature before we jump into any position. But trust me, I will always give you an update as at when due. So on this note, I want to wish you best of luck today, and I will look forward to seeing you right in the comment section on both my TradingView and Telegram platform as we continue to monitor price action. Do have a wonderful evening, everyone. Bye-bye.